Welcome back. The financials led the rally on Friday, as Anuj was pointing out. What a big, it was it's almost a 7% rally for the Nifty Bank, but even bigger rally in some of the NBFCs because of what the Reserve Bank had announced in terms of the targeted LTRO. But how will they work? Over the weekend, people have got doubts. And to explain them, we have Mallikarjuna Rao, Managing Director and CEO of Punjab National Bank. In a bit, we will have the BOB ED also joining us. Good morning, Mr. Rao. What's with this TLTRO? People are complaining that it is difficult to find 25% of the money to be given to MFIs and NBFCs below 500 crore. Is that right?
Yeah, it is actually 10% towards what you call MFI, then 15% towards the NBFCs up to 500 crores, and another 25% towards the NBFCs between 500 crores to 5,000 crores. It is a welcome definition given by RBI. The reason being, the allocation otherwise generally what it goes, whoever comes first or when the
Mr. Rao, there were bankers telling me over the weekend that it is very difficult to find those under 500 crore guys. And their request therefore was that maybe they should convert it into loans. As of now, there were at least two big bankers who told me we are not even going to apply in the LTRO because we are not sure we can fulfill the obligation of under 500 crore. What is your position?
No, the challenge comes from the rating. Why the bankers are thinking in those lines is because the rating of the MFIs, rating of the NBFCs to be an investable grade is a challenge. Even the request comes, it would be difficult to look into that. But while saying so, I do not rule out completely, but definitely the window of giving loan and window of providing LTRO both should work simultaneously.
Actually, let me quickly discuss the other bit as well, and we'll bring the graphics to that. The Indian Banks Association meeting, where looks like there is no consensus on whether NBFC should get moratorium or not.
See, the problem in NBFC getting moratorium is unless you understand how the funding is done. I'll just take 1 minute, 2 minutes to explain to you. If you look back from October 2018, there was a trouble with respect to the liquidity of the NBFCs, purely because of the asset liability mismatch. Then afterwards, banks have come forward to fund to them. While funding to them, NBFCs, majority of them have used for refinancing in such a way that their asset liability mismatch, they have got it reduced. So what does it mean is that they access to short-term funds and then lend in long-term usage. As a result, whatever cash flow they get out of the repayments or collection, part of it goes to relending and part of it goes to the obligation of what you call debt liability.
Okay.
As a result, the funding what they take from different banks are different, rather heterogenic in the repayments.
Got that.
Or heterogenic in the schedule.
Yes.
So that is the major area of what you call complexity when the banks wish to extend the moratorium to them.
No, so the short point is they are not going to get moratorium, at least as of now?
No, I would not say that. I would only say that it will be dealt with case-to-case basis.
Okay. Okay. So you will grant moratorium to some people?
Yeah, correct.
Okay. And what about the limit, exposure limit? Some people were complaining about even exposure limits having been reached to up to 10%, I think, for NBFCs.
No, the exposure ceiling individual or overall bank. See, individual, it was earlier 15%, which was extended by RBI to 15% under LEF framework.
Okay.
Where when you take an internal limit of the bank towards the exposure toward NBFCs, it ranges from 9% to 13% for different banks. Some banks keep it 10%, some banks keep it 11%, depending upon the risk appetite of the organization.
Okay.
So while that will be left to the bank themselves, because there cannot be any regulatory guideline on that, it all depends upon how you are moving towards the high-rated NBFCs.
Okay. So Mr. Ramaswami, Murali Ramaswami of Bank of Baroda is also with us. Mr. Ramaswami, I want to move to another issue. The Reserve Bank has extended that moratorium come NPA classification forbearance only for those cases that are overdue as of March 1st, and as well that June 7th circular relief is only for those companies where they are, the completion period, that 210 days ends after March 1st. So should we worry that a lot of the banks are going to report higher NPAs for the quarter gone by? Q4. The banking sector as a whole will show higher NPAs for Q4.
I don't think so, madam, because RBI policy is good, and though you said this June 7th circular, but still this standstill clause which they are given, and that will give us the benefit. And so I don't think NPA will rise substantially in the fourth quarter. I don't think so.
Okay, I'm sorry, it's a bit of a jargon for those who are not following banking very closely. In the June 7th circular, RBI had said that once an account becomes stressed, they get a maximum of 210 days. First 180 and then another 90 days. And in 210 days, you have to resolve it or you take it to the NCLT. Now in the Friday circular, they said that if that 210th day falls after March 1st, you can take it to 3 months more because, you know, there was no activity possible in March. But for most of the cases, that 210 had already happened before March, which is why the fear among many analysts that banks will report high NPAs. Your thoughts, Mr. Rao?
The 210 days kindly split into two parts. One is 30 days, the period initial, and then 180 days from the completion of that day. Now, what RBI said on 17th is that if the 30 days has not completed as on 1st, the period from 1st March to 31st May will not be counted.
Yes.
And only from 1st June it will be counted.
Yeah.
Similarly, if the period is within the 180 days, same treatment has to be given.
Yeah, okay, so the short question is, will NPAs rise, sir, for the sector?
My point will be very simple. If everything is completed before 1st of March, when NCLT was working, the banks would have gone to NCLT definitely. The problem has arisen only during the March.
Okay.
So after 1st March, no account will go to NCLT until June 30th.
So your expectation is we should not worry about high NPLs?
I'm not saying we should not worry. We are probably looking into too much of crystallizing thinking that NPS will increase. Even otherwise, NPA, whatever was there by 1st of March, if it had completed 210 days, would have gone to NCLT.
Okay.
The question is here only provisioning, additional provisioning required to be done. If the resolution is not achieved within 210 days. So
there could be high provisioning. So should we worry, Mr. Ramaswamy, that there will be high provisioning in most of the banks?
I don't think so, madam. As the resolution plan earlier the speaker has told, most of them would have completed the resolution plan and put in place.
Okay.
So what is this will not be much, and provisioning will be as usual, and there should not be any spike in portion. That is my view, because the RBI standstill clause is a benefit. They are given a lot of we are giving COVID emergency credit. A lot of benefits are being given to the customers as such, and to meet the challenging times. So I don't think there will be any spike in portion in moratorium, nor increase in portion, because whatever the resolution to happen has already happened and put in place. So that may not be a big issue. That's what my feeling.
Oh, right. That is reassuring, but a lot of analysts believe differently. Even for that matter, IBC lawyers believe that there could be a problem of higher NPAs and provisioning. But let's wait and see when the results come. Thank you very much, Mr. Rao and Murali Ramaswamy, for joining us. We have to take a break. We are running into 8:45. So technical advice from Ashwini Gujral, Sudarshan Skan and Nitesh Thakkar waiting for you.